Good morning, everyone. This is the Vermont House Committee on Commerce and Economic Development. It is Wednesday, January 15th, 2025 at 9 in the morning. So this morning, from 9 to 10:30, we'll be hearing an introduction by the Department of Financial Regulation. Various deputy commissioners and interim commissioner Bigglestone will be chatting with us, giving us an introduction to all the different areas that the department oversees. So, Commissioner Bigglestone, good morning. Good to see you again. Thank you for joining us.
Morning.
Morning.
So some familiar faces. Appreciate the opportunity for us to be here. I am Sandy Bigglestone. I am the current acting commissioner of the Department of Financial Regulation. I am also the deputy commissioner of the Captive Insurance Division, and we'll get into the DFR structure in a few moments. Chairman Marcotte and representatives, thank you for having us today.
Before you get started, I think we'll have the committee introduce themselves to you so you have an idea of who is who. And
Great.
I'm Jonathan Cooper. I live in Pownell, representing Bennington One, which includes the towns of Reedsboro, Stamford, Searsburg, and Woodford, and the bulk of Pownell.
Excellent.
I'm in Terrace Duncan, Wilmington, Whitingham, and Halifax.
Herb Olson, let's say in Kansas, Bristol, Lincoln, Moncton, and Stark.
Good to see you again.
I'm Abby Duke. I represent the best part of Burlington.
Gotcha.
Katie Granny, representing Jericho and Underhill, and the vice chair of the committee.
I got from Coventry. I represent Coventry, Harrisburg, Newport Town, Troy, J, Westfield, Lowell, and Eaton, and chair of the committee.
I'm Kirk White. I'm from Bethel. I represent Bethel, Rochester, Stockbridge, and Hancock, and I'm the ranking member.
Tony Priestley, Bradford, Fairleigh, Westfield.
City.
Tony Nicholas, from Milton, representing the bulk of Milton and a little bit of Georgia.
Excellent.
Dave Bosch. I live in beautiful downtown Clarendon Springs, and I represent Rutland 2, Wallingford, Clarendon, the bulk of Rutland County.
Great representation. All right. So I guess the floor is mine. I'd also joining me today is Deputy Commissioner Aaron Ferentz from Banking, Deputy Commissioner Amanda Smith from Securities, and Deputy Commissioner Emily Brown from the Insurance Division. And you'll hear from them a little bit later. So as acting commissioner, I've been with the department I'm in my 28th year. All of my regulatory career has been in the Captive Insurance Division. But that said, we often, cross over to other divisions and utilize each other's resources. So it's been a very collaborative career from my standpoint, and appreciate the opportunity to be here when I can. So if we move to, if we have the slides, we're working on the slides, but just to.
It is posted on the legislature website.
Perfect. So I'm on.
Oh, Emily Brown, Deputy Commissioner of Insurance.
Thank you.
So I'm on the slide of the DFR organizational structure, which is slide 2. And the commissioner is part of the administrative division. We also have, again, the Captive Insurance Division, the Securities Division, the Banking Division, and the Insurance Division. You turn to slide 3. This is a department headcount. We are primarily responsible for regulating the financial services sector of Vermont. And it's the financial services industry, and the regulation of it evolves immensely from year to year and over time. That's been my experience anyway. And we do all of this work with 110 people. So the administrative division consists again of the commissioner's office and the general counsel's office. And there's 18 people. We have a few open positions that we're recruiting for at the moment. Banking division has 17, the captive insurance division has 32, insurance 34, securities 9. They're small but mighty, I like to say. And turning to the next slide, this is our department's mission. Primarily, we are here to protect consumers against unfair and unlawful business practices for each of the industry sectors that we regulate. Turning to the next slide, this describes a little bit of the administration division. Again, general counsel's office, but there's also a few other, there's director of policy, which we are in the process of recruiting for, and communications team member. So let's get into our first division, if you will. So on slide, I guess this is slide 6, we have the captive insurance division. And today there's over 8,000 captive insurance companies operating worldwide. There was roughly 1,000 captive insurance companies in 1980. So that kind of gives you a little bit of perspective of the growth of the marketplace. And just backtracking a little bit, a captive is essentially a private insurance company with a limited purpose, which is to insure its owner or owners. All sorts of organizations can utilize and set up their own captive insurance company for managing and financing their risks. And for that reason, each captive can be very unique in its own right. There are more than 70 jurisdictions worldwide that license and regulate captive insurance companies. 40 of those jurisdictions are in the US alone. Vermont has a pretty large share of that market. And a little bit more perspective, there was more than 100 billion in premiums written by captive insurance companies just in the US alone last year. Vermont premiums written were 33 billion. So our regulatory division currently licenses almost 700 captive insurance companies. And in 2023, our growth allowed us to rise to number 1 worldwide as a captive insurance jurisdiction. And we don't take that lightly. We believe that over the course of 44 years now, since the legislature passed the Special Insurer Act of 1981, that since becoming a domicile back then, we work very hard at being a leader in the industry, being a leader in captive insurance regulation and upholding the highest standards. And so, we typically stay true to our mission and allow quality business. That is part of our mission. You see here on this slide is to attract quality business, to have quality regulations, and protect not only Vermont and the reputation of the industry and our regulation, but protect the investment businesses and organizations are making in setting up their own captive insurance company. And we do that through financial compliance and solvency measures. So this slide contains a few key metrics that demonstrate the strength of Vermont as a domicile today. Again, over 31 million in premium taxes, and that's been an increase. Again, the marketplace is growing, and we're still getting our fair share of quality companies coming to Vermont. So that has been an increase of over 8 million since 2012. We also collect examination and registration fees. The top 5, the past 5 years have been in our top 10 years of growth in all of 44 years. We have a bit of economic benefit to Vermont with 21 captive management firms and staff that are employed in those financial services jobs. So it creates 400 plus direct jobs supporting the industry in Vermont. We are also home to the largest trade association supporting the industry, and they have advocacy both at the state and the federal level. So there we are. So a little bit more about how we do what we do for the captive insurance industry to make sure that they're compliant and solvent. And I'm on slide 7. And again, we focus on activities that are for solvency and compliance. Not every captive proposal is a good idea or is feasible or is even lawful. So having the knowledge and the expertise and the specialized focus in the captive insurance division and our regulatory activities is key to Vermont being a success and having quality standards. We utilize an initial application for licensing. We also utilize consulting actuaries because that helps us. We don't have an actuary on staff at the DFR, and it helps us place confidence in that the captive proposal we're looking at is going to be viable into the future. After licensing, we have a number of regulatory processes and procedures that are based on annual and quarterly financial filings, compliance filings. We perform financial analysis, and then every 5 years or sooner, based on the priority of the company and how it's performing, we do our own statutory examinations. The majority of our 32 staff within the division are financial analysts and examiners. And I'll introduce some of those folks in a moment. So just to finish up on this slide, I just want to say that state-based regulation does play a role in captive insurance regulation. Our practices originally derived from the standards set by the National Association of Insurance Commissioners. These are insurance standards that every regulator understands. But what we have done over the years has we tailor it to the business of captive insurance because there's not a consumer protection focus like your typical insurance company that sells commercial policies and personal policies to consumers. So for that reason, our captive laws need to have a reasonable degree of flexibility so that it can accommodate the varying needs of businesses setting up their own captive. So turning to the last slide of the captive insurance division presentation, this is a good subset of our staff, and you see our prior commissioner, Kevin Gaffney, in this picture. This was when we were together at a conference up in Burlington and celebrating number 1, and we all have our number 1 foam fingers and took that fun picture. But this slide really kind of outlines for you the caliber of our staff. Our people, not only in the captive insurance division, but all throughout DFR, in my experience, are our greatest asset. It takes a lot of expertise to regulate our financial services industries. And so we really do we aim to have goals that focus on, creating regulatory divisions within DFR that attract and develop and retain qualified staff. So I'd love to turn it over to Deputy Commissioner Emily Brown. It may make sense to take questions after we all get a chance to introduce our divisions, but I defer to you as to what you would like to.
I think it may be easier for the committee as we go along through the different divisions if there are questions.
We've got time.
One thing, like, Sandy, could you just mention the awards that you and the department has won over the years?
Yeah. I've lost track. I've lost count, but it's a good thing. So in the past several years in a row, we've won the U.S. Domicile of the Year award. And I have to say that it's not just the regulatory division, even though we play a major part in the quality of our domicile. it is the people who make up the industry and our industry association that contribute to the expertise right here in Vermont. We also have won for several years in a row the International Domicile of the Year. We have over almost 80 companies now that have ownership ties to 23 different countries around the world. So we are attractive from that standpoint to organizations that operate on a global basis. They have US operations and they also have non-US operations. There are domiciles popping up across Europe. And so, that may change, but they're still trying to figure out what their regulatory regime will look like. And I was just on a call the other day with folks in London because Lloyd's in London is looking to become a captive domicile, and they wanted to pick my brain about how Vermont does it. So we often have those conversations, and I promise you I'm not giving away all of our secrets. We definitely have something to protect. And companies do like to come here and they speak on panels globally for, these are risk managers and CFOs and CEOs of companies that are proud of what they've been able to accomplish just with their insurance program using a captive.
Also, talk about the intersection with the Agency of Commerce.
Yeah, thank you. So years ago, the Special Insurer Act came about in 1981, and then several years after that, or a few years after that, the Vermont Captive Insurance Association was born, and their membership is the industry, the captive owners, the service providers. And then around that same time, the Agency of Commerce and Community Development, through the Department of Economic Development, created a position that's financial services promotion of the industry and marketing position. That has been a model for Vermont all that time. And what that allows us to do is to focus on regulating the industry and being the gatekeepers for good business and lawful business. The promotion of the industry is left up to that person within the Department of Economic Development, so regulators don't have that conflict. That said, there's a lot of collaboration. We share information so that that person has information to know how to create a marketing plan and promote, businesses based on the work that we have done. So that person also works, I think, very closely with the industry association to understand from their standpoint what the needs of businesses in the captive insurance realm require.
So, Deputy Commissioner, can you maybe talk a little bit about how a strong and reasonable regulatory regime impacts Vermont's place as a desirable domicile for captive insurance?
Thank you. Yeah. So I've heard time and time again from companies, when you think about regulation, people sort of cringe, like, if you think about corporations and wanting more regulation, but they actually appreciate it. They appreciate our approach to regulation. They know that they have when things go right, they can tell us about it. When things aren't going so well, they feel comfortable approaching us to ask us, based on our experience, what can we do? How can we fix this? When we do examinations, I've heard time and time again how companies appreciate the value and the focus and the expertise that our staff has shown during an examination, and the understanding not only about the insurance operations from a balance sheet and an income statement perspective and that sort of auditing of that, but how the company approaches risk management and mitigating losses in their control environment, their loss control environment in the first place. And our folks are pretty specialized. They need to understand many different industry sectors, and how those organizations are operating in their world. You know, if you think about a manufacturing company, for instance, their mission is not to run an insurance company. And so it complements their risk management program, and their corporate strategies for managing risks and assessing risks. But when you have a specialized exam team coming in and really understanding how having a captive impacts what they do and making their environment safer from a business standpoint, they really do think that that adds value.
Thank you.
Questions?
And Representative Olson, just to follow up on that, companies that come to us now, you know, the risk management world is large, but somewhat small. So risk managers across companies talk to each other. They're, you know, within their specific industry sectors. Companies are coming to us and we always ask, why Vermont? You know, you have your corporation headquartered in X state. You have captive insurance laws there. Why? You know, because they do a domicile analysis before selecting where they want to go. And we always ask, why Vermont? We want to hear directly, why do you need a captive and why Vermont? Those are the two primary questions. And it's because they want quality regulation, and it creates accountability from their standpoint, and the reputation is strong.
So follow up on that. So your conversations that you're describing there are not with the portion of that business that is the captive insurance element. You're describing conversations with the corporate decision-making bodies.
Yeah. Our exam staff interview, so the board members of the captive are made up primarily of, you know, executives from the corporation or the business organization. And we interview board members during examinations because we assess governance.
An examination is a
financial examination. So insurance statutes and banking statutes and security statutes require regulators to perform examinations. We call it examinations. It's primarily an audit, but it has a different focus than a CPA audit.
So in our present world of increasing disasters, such as the fires in Los Angeles, the flooding in Vermont, how does that impact you as a regulator? Like, how do you, I guess, navigate that and look towards the future with that uncertainty?
Yeah. So again, you know, captives aren't a solution for everything. It has to make sense and it has to be feasible. There's a cost to running a captive. So a feasibility analysis is first and foremost to kind of decide, you know, every organization, including the state of Vermont, has a risk appetite. And you either transfer that risk 100% to an insurance company. And if you have a claim, that insurance company will pay 100% of your claims for the policies that you buy. You can retain some of that risk. And if you think about a Fortune 100 company, if they don't need insurance paper, rated paper because of a financing arrangement or some other reason, they can retain risk on their balance sheet. And if they have a loss, they pay for that. A captive insurance company is a tool, risk management tool, in a regulated entity that allows them to pay premium to their insurance company, set aside reserves. So it's a structured way that segregates for the risks that they underwrite in their insurance policies. And it can be tailored risk. So they start from traditional forms, but they can tailor it to their needs. And oftentimes, because of natural disasters, circling back to that, we're finding that businesses are having gaps in especially their property policy. The property line of business has been a growing line in captives. It's a bit scary. So if you're you know, captives can fill gaps, but they need to be funded well, right? So feasibility, again, the other question we always ask, if something goes wrong, how are you going to mitigate that? Is there a corporate entity that is financially healthy that can contribute more capital to the captive? That's definitely a part of, so we monitor parent companies as well. Captives are tough with natural disasters. You know, everyone is affected by that, businesses, consumers alike. Vermont law prohibits personal lines, so we cannot do personal homeowners in a captive. So it's a tough situation for California wildfires. But if, you know, that we have had proposals coming into captives to help sort of supplement the needs for businesses and that type of property coverage.
Questions?
So just to zoom back out to the full commissioner, because we will have a deeper dive into captives later this month. So staffing in the department, does it feel adequate to you? Does it feel like, are you fully staffed? Do you have vacancies? You mentioned that you use consulting for actuaries. Is that
Yeah,
something you'd like to pull into the department?
thank you for that. I think if we were to hire an actuary, it might make sense to have a DFR actuary. Certainly from the insurance side of things, there's been some needs. But I have to say, from our standpoint, you know, we utilize a contract and we control the cost by setting a flat fee. And so I think it works well. And we have about 12 actuaries on contract over, say, a 2-year basis. And it helps us because we have so much activity between licensing, and then we also utilize for a portion of our examinations an actuary review. And so if you think about the volume of work, it makes sense to spread that out among a team of actuaries, if you will. Going back to your question about adequate staffing, we were able to put in for 2 positions based on our growth a couple of years ago. We've had some turnover. We have been attracting, so the hires that we've made in the past year or 2 years, I'm pinching myself because they're amazing, qualified people. So I'd like to say that we can continue to attract that caliber of people. I think right now, we're always projecting at least a couple of times a year based on what we're seeing, our workloads. We're projecting our needs. And right now, I would say, at least for the next year, maybe hopefully longer, we do feel like we're adequate and we can still be efficient in what we do.
Thank you.
Does everyone understand what the actuary is in insurance and what they do, or you could give us a high level?
Yeah, so actuaries are specialized folks. The actuaries are used in a number of different ways, not just for insurance. And they're skilled mathematicians that have you know, all of the credentials to model losses. So they will take industry data based on certain lines of business. They'll take data from businesses and organizations, and they'll model that and predict what your ultimate losses are for a particular line of business or a set of schedule of lines of business. And we utilize them primarily to look at the work of the captive insurance company's actuarial analysis and give us an opinion on whether or not it's reasonable, and the methods that they've used to model and to come up with their loss reserve number that they have to book on their balance sheet is adequate. That it gets pretty complicated with the methodologies and I often wished I was an actuary, but I can make my way around an actuarial study pretty well after all these years. Thank you. Appreciate the questions. Deputy Commissioner Brown.
Morning.
Morning.
New faces and some old ones. It's nice to meet you all. My name is Emily Brown. I'm the Deputy Commissioner of Insurance at the department. I've been with the department for, this will be my 10th year. And I started actually out in the securities division, hopped over to the attorney's office, and then now I'm in insurance. So I've kind of been around the block. But I've been with the insurance division for about 8 years. Previous to my time at the department, I actually worked for legislative counsel. I was a law clerk. That was kind of my first exposure to policy work and regulatory work, and I really fell in love with it. So I'm really always happy to be here in this role and talking to you all about the work that we do. So I'm going to start, and I don't see my slides. Did they get? Sorry. Oh, thank you so much. I'm sorry. We're having some technical difficulties. Isn't surprising. Thank you. So I oversee the insurance division. And our division is made up of, we're staffed for 34. Currently, I think we have about 29 employees. Last year, we had 3 additional FTEs added for pharmacy benefit management oversight. So we're in the process of creating those roles and filling those positions. And then just to go back, I know there was a question about an actuary. We actually, over the past year, have been attempting to hire an actuary within insurance because a lot of our work relies on third-party consultants. And for a lot of reasons, efficiency, to have that in-house expertise, we've been attempting to hire that. And then we also have a market conduct examiner, which has been also vacant for a little time. So currently we're not fully staffed, but we are, we have a lot of expertise as the captives division and doing our best to fulfill our regulatory responsibilities. So why are we talking about insurance? So insurance is pretty unique in that it is, the regulation of insurance is really just designated to states. So all the states in our country are in charge of their own insurance market. And in Vermont, our traditional insurance market has over $5 billion of premium written on an annual basis. So it's a pretty substantial part of our economy. And an important part because it really does touch all of us. If you think about your life, your health insurance, your auto insurance, your homeowner's insurance, it really does. It's very impactful and has a day-to-day impact on all of our lives. So I'm just going to walk through, I'm on, I think, slide 9. I'm going to walk through kind of some highlights of our division. So I mentioned the $5 billion in premium. That brings over $42 million in premium tax for FY24. We have and regulate over 25 Vermont domesticated insurance companies. And what that means in the context of our role is that we are the primary regulator of 25 companies which have chosen to have their domestic location in Vermont. Some of the names that might be familiar to some of you are the Co-op, Vermont Mutual, Union Mutual, Blue Cross Blue Shield Vermont, National Life, which is here in Montpelier. So all of those companies are regulated primarily by the Vermont Department of Financial Regulation. It doesn't mean that they only do business in Vermont. A lot of these companies do business either regionally or nationally. It just means that we are the primary regulator for these companies. And that way, when they go and do business in other states, those other states know that our department has looked at their financials, make sure that they have proper reserves to operate in other states. And that's kind of how insurance regulation works. It's a system of all these jurisdictions which really have as Sandy mentioned, the National Association of Insurance Commissioners. Those are the national standards, which all states have chosen and agreed to adopt on and work in conjunction with each other to make sure that our country really domestically and internationally have a very strong regulatory structure in place for our insurance industry. And then moving away from our domestic insurance companies, we have over 1,300 and we have 1,302 insurance companies that are licensed in Vermont. So that means for property and casualty industry, life, health, there are over 1,000 companies who sell policies in Vermont to Vermonters. So moving down to the bottom left hand of the screen, we also have a producer licensing team. So what that team does is we oversee Vermont insurance agencies. The agents are producers. So these are people who are selling insurance to Vermonters, and there are standards in place and laws in place that those individuals need to abide by to be able to sell products to Vermonters. And this includes continuing education that is a requirement, but also standards in our laws that they have to abide by, and that we, as the regulatory agency, make sure they're complying with. And then below that, there's over 5,000 foreign agencies, and foreign's kind of an antiquated term, but what that essentially means is agencies that are outside of Vermont. So you have maybe an agency in New Hampshire or Massachusetts that operates in Vermont, and that has to be licensed. And then the next data point here is from those foreign agencies, you have over 110,000 foreign agents. So these are the individuals who aren't Vermont residents, but are selling policies in Vermont. The top right hand is our consumer services section. So this is, I think, one of the most important areas of our work, and this is our consumer services team. So they are the frontline folks who answer calls from Vermonters. If there's a consumer who has a complaint against an insurance company or a producer, or if they even just have a question, they can call us, and our consumer services team does the best to try and answer those questions. They can directly interact with insurance companies, which is a great aspect. It kind of provides consumers who maybe don't understand their policy kind of a backing to help them talk to an insurance company and use that language that an insurance company used to help them resolve disputes. And I think last year, that section brought back $740,000 to Vermonters. So that wasn't always, a violation, but it could have been, hey, I feel like this claim should have been handled this way. And then our section goes back to the insurance company and works with them to make sure that the resolution that the insurance company came to was actually in compliance with our law. And then the bottom right hand is our market conduct section. So last year there were 2 points. So when something comes into consumer services and our team looks at it and says, this is more than just a one-off, this might be a systematic issue, our market conduct team takes that over and then can either do an investigation or an examination on insurance companies, and then was able to bring back $3.1 million in restitution to Vermonters. So that's a huge amount of money that our team was able to recoup. So going on to the next slide, this is just an overview again of our sections, and I know I kind of touched on that a little bit in the last slide. But this just gives you an idea of kind of the day-to-day and the work that we do. So company licensing, they're in charge of licensing, registration, and the financial oversight duties. And I've been talking a lot about insurance companies. We actually oversee several other types of entities that are operating in the insurance market. So some of them that you might be familiar with are third-party administrators. So those are the entities that might administer an insurance plan or health insurance plan on behalf of a company or an employer. I mentioned PBMs, pharmacy benefit managers. This is a new area of regulation that we actually just gained last year. And I'm sure they've been in the news a lot. They are the entities that are responsible for administering prescription drug claims. So whenever you go to the pharmacy, it's actually a PBM that's determining your coverage and how the claim is processed. service contract providers. So if you go to buy a car and you're sold that lovely additional supplemental policy saying we're going to cover your, your windshield cracks and anything else. We oversee them. They're registered with our department. So there's varying degrees of regulation that our company licensing team oversees. But I just wanted to kind of include a few of these so that you understand that it's not just insurance companies. There's a lot of other parties that kind of operate in the insurance space and that we have regulatory authority over. I talked about producer licensing, so I won't spend a lot of time on that. That's just basically the people who are selling the insurance in our state. And then I haven't talked about our rates and forms section. So if you buy an auto policy in Vermont or a life insurance policy, all those have been filed with the department and approved by our staff. So there are several statutory and regulatory requirements that insurance policies have to comply with. And so what our staff does is an insurance company comes to us and says, we want to sell this policy in your state. They file it with our department. We review it to make sure it's in compliance, and then we put our stamp of approval on it so that it can be sold in the state. The rate side, the premium side, is a little bit more nuanced. So depending on what type of policy you're purchasing, the premium might or might not have been approved by us. So an example I like to give is life insurance policies. Premiums are not approved by the department. There are standards in place, but it's not, that rate that they're charging is not approved by the department. For your health insurance, so that's a little bit more nuanced. If you're buying a disability policy, that premium that they're charging will have been reviewed and approved by the department, your title insurance, and then also your auto and homeowners insurance premiums. So whatever that company is charging you, they'll have a filing with the department that shows what factors they're using and how they've reached the conclusion of what to charge someone based on data and trends that they see. And again, that goes back to the actuaries who are really looking at the data and saying, okay, what is the right premium that we need to be charging for this risk? Going on to the next slide, slide 11, consumer services. I talked about that. That's our complaint and inquiry staff. And I actually included the link here to our online area where you online area of our website where you can actually go online and file a claim or a complaint with our department. So I know a lot of the legislative members reach out to our department and say, hey, I have this constituent. So I just wanted to include this here so that you have it. So if you do have a consumer who reaches out to you or constituent, you can lead them to our website and they should be able to easily file a complaint or inquiry there. Market conduct, so conducts investigations and exams of regulated entities. And then I just wanted to kind of do a what's new section. So I just highlighted regulation of PBM. So that is a big area that was very hot topic last year. And then more things that are relevant to this committee, S95, which is the auto study. So I'm losing track of time, but a few years ago, we had a lot of great discussion around auto insurance and auto body practices and how kind of looking at how the market right now is working. So we were tasked in S95 to look at several issues around auto insurance and to really study and see if there's any changes needed to understand how the market's working right now. And then we're going to come back to this committee and a few other committees and talk about those study results. I will preface that in saying we are working very hard. The report was originally due November 2024, but due just to some resource issues, we've asked for an extension to next month. We might be coming to you with another ask, but we do plan on giving you a substantive update of where we are and what results we have to date, so that you kind of have a feel for the work that we've done so far. And then something else that's really important is the flood data call. So in 2023, when Vermont experienced those floods, the insurance division did a flood data call for all of our insurance companies, not just those providing flood insurance, but actually all property and casualty insurers to make sure that they were settling claims in a timely manner, responding to consumers, really just to try to get an understanding of how insurance companies were responding to this disaster, making sure that insurance companies weren't canceling individuals because they were victims of the flood. We actually just issued another flood data call in response to the 2024 floods, unfortunately. So I think that those responses are due January 17th. So we'll be kind of getting a new sense of where the market is and what's the result of those floods were on the insurance market for this past summer's events. And if you're interested, the 2023 data for the flood data call is on our website. So happy to come back and talk through that as well if that is of interest. So, and that's it for insurance.
Sort of picking up on the natural disaster
Yes.
thing.
Yep.
Are you seeing any shift in the insurance industry in terms of their willingness to cover and things like that?
Yeah, so I think there's a lot of different pressures right now on the insurance industry. So there are the natural disasters. And fortunately in Vermont right now, we're not seeing the immediate impacts of that. So I think if you look to Florida and California and out west, right, with the wildfires, the flooding, that's and aside from the floods that we've had in Vermont, right, which I'll talk a little bit about why that hasn't been as impactful to the Vermont market in a second. But we're not really seeing, for instance, like the wide cancellations that they're seeing in California, right? I will say that what is happening is, and what has been happening for the past 5 years is the market's hardening. And what that means is that underwriting standards are becoming stricter. So instead of insurance companies maybe not scrutinizing their risks as much as they used to, they're starting to really look at the risks that they're taking on and saying, okay, we're digging a little bit deeper. We're taking a look at this property that we want to insure and maybe asking more questions. And what that is leading to is potentially insurance companies maybe deciding to be a little bit more picky about what risks they want to take on. Other factors, inflation, right? I know that's cooled in the past few months, but that was a huge factor in insurance premiums, which I'm sure I know I've seen my premiums increase. That was an impact that I think we've seen not directly related to natural disasters, but like, you know, there's a lot of different factors like the pandemic and
Health
several,
insurance.
right, and health insurance. So I think we're seeing a lot of those disturbances filter out in different ways. Costs of goods, which can also lead back to the supply chain issues we saw. So when a builder can't get a piece of lumber for the price that they used to rebuild a house that's covered by insurance, that cost that gets passed through to the insurance company, which then gets passed through to the policyholder. So there are a lot of different factors which are leading to pressure on the market. Another aspect which a lot of people might not be aware of is reinsurance costs. So an insurance company actually has their own insurance. So when you buy a policy, there's a good chance that there's your insurance company, but then there's a reinsurance company who's standing behind that insurance company. And what that entity does is provides coverage for the catastrophic losses. So as we see more national catastrophic losses, those reinsurers are starting to say, well, we actually need to charge more money on a national basis for this reinsurance product. So while it's not directly the insurance company, that reinsurance cost is then being passed on to the insurance company and then to the policyholder. So I think something to remember about insurance is that we're all in it together. And while we are charged with reviewing rates for Vermont, there's no way to completely avoid cross-subsidization because insurance is a pool. So when there are things happening in California, while we might not have a policy that's rated for that wildfire risk, it all filters into the market in different ways that then put pressure on premiums and availability. Does that answer your question? Okay, thanks.
Yeah. So you said you approved the premiums for health insurance?
Yes, and I should have qualified that a little bit but go ahead with your question and I'll clarify what I meant.
So if they're not approved, they can't do business in Vermont, correct?
So if the premium for that policy is not approved, that means they just can't charge that premium. That doesn't mean they can't, so let me back up a little bit and talk about health insurance, because health insurance in Vermont is multi-layered. So health insurance premiums, there's several different types. So there's the disability policy I mentioned. There's also major medical insurance, which is a whole nother area. And have you heard of the Green Mountain Care Board? So the Green Mountain Care Board is the entity that's responsible for approving major medical health insurance premiums. So that's, I don't know if any of you purchase insurance off the exchange. Those premiums for those policies are approved by the Green Mountain Care Board. And that decision was made when the Affordable Care Act went into place. The Green Mountain Care Board was established for not only single payer, but then also to kind of do more healthcare reform and approve the major medical rates. The department approves supplemental health insurance, so accident, disability, cancer policies, like all the things that aren't major medical, essentially, that have to do with your health that you might buy. We also approve the VHI rates, which are the teacher health plan rates. So not to get too in the weeds, but with property taxes, a piece of that conversation has been around the health insurance premium for the teachers' plans. Those rates go through the department and are actuarially reviewed by us. Medicare supplement. So I'm sure a lot of you have heard about Medicare Advantage. Medicare supplement is kind of a plan that goes on top of traditional Medicare. We look at those rates. So everything else that's kind of these more tangential rates go through our department. So does that?
It answered my next
Yeah,
question.
and then to your point, right? If let's say a company sells a few different health policies and the department says, no, you can't charge that rate for that policy. If we disapprove a rate, usually we work with insurance companies to get to a rate that we can approve. We don't want to hinder business in our state. We want companies to operate here. So if a company comes in with a rate that we say that's not supported by data, you need to look at X, Y, and Z, they work with us, and then we'll come back and say, okay, we agree or we disagree. And it's definitely, we try to work together with them as much as possible to come to a rate that we feel like we can approve. If that makes sense.
Just so everyone's aware that it's the one insurance that we don't have jurisdiction on.
Right, yeah, yes, yeah.
Thank goodness.
Right, I know, right?
Just something, I don't want to start a conversation.
Yeah.
Talking about Medigap
Yes.
insurance. Yes. Is there a way that the department can approve the rates before they go to market? Because I'm on Medigap, I have Medigap plan. When I came up for renewal, it was showing one price, and then when I got my bill, it was a different price because it hadn't been approved yet. So there's a way of adjusting that so that seniors that are on Medigap actually get a true price when they're researching what they want to do.
So without knowing who your carrier is, and I don't want to know, we try to encourage companies to get in early. So we know that policyholders are shopping around that fall timeline. And we've really tried in the past years to say, okay, get those rates into us in July and August so that by the time we look at it, go back and forth, have our actuaries review it, that rate is being approved in time for consumers then to have the right rate to actually accurately shop for a policy. So something we're working on, but a lot of it is dependent on when they file their rate. So if they come in September, October, we have 30 days to review a rate. And there's just, again, because of the volume, we don't have the capacity to turn around in 10 days and say, yep, approved. And we don't want to do that. We want to take a close look and make sure that what they're filing is supported. So
maybe that's another conversation.
Yeah.
Not to overly continue, but do you have any sort of ability to fine or in other way punish for like not getting things in on a certain timeline or?
Yeah, so because in Vermont, it's supposed to be a competitive market, companies have an incentive to file on time, and really they shouldn't. I think the Medigap one is unique in that way. A lot of times we don't allow insurance companies to put a rate out there that's not approved without some sort of like qualifier, right? That's a conversation that we have. But there should be an incentive by the company to say, I mean, the penalty in that instance is that they really shouldn't be, people won't have the accurate rate to shop with. So then when you as a consumer are trying to make that decision, you're saying, oh, I'm going to go with company X because company Y, this rate isn't finalized. I don't really know what my premium is going to be. So maybe they lose that business. I understand the Medigap, Medicare supplement is a little bit different because people might have a company and they don't want to switch, or, there's a lot of different dynamics there. But there is no filing deadline, but that's something I think to look at and consider. So,
We're running out of time.
sorry. Okay, great. Thank you. Thanks so much. Thank you for.
Very well.
Just so everybody, the committee, this isn't the only time that we'll be having discussions like this with banking division will be in to talk about some reports that are due us as well, as Emily will be back again, Sandy will be back in, so this is kind of just an overview. And if you have questions, apologize at a time if I have to cut things off, or want to make sure we have enough time for a break before we get the next one in too.
All right.
Welcome.
Good morning, Aaron Ferentz, Deputy Commissioner for the Banking Division at DFR. Just a little background, I've been with DFR for 22 years. I started as a field examiner and now I run the show. Just if you turn to my presentation on page 12 is where it starts. Just to level set, America has a dual banking system. So there are state chartered banks and credit unions, and there are also nationally chartered banks and credit unions. The banking division really is only able to regulate those state chartered based institutions. Currently in Vermont, we oversee directly 7 state chartered banks, 11 credit unions, and 3 state chartered trust companies. There are a lot of other nationally chartered banks and credit unions operating, Chase Bank, TD Bank, et cetera, but we don't really have direct oversight over those. There's been a lot of consolidation in the banking industry over the last years. When I started, there was roughly 10,000 banks. There are now a little over 4,000 banks nationally. However, we have seen growth in Vermont in 2022. We chartered the state's first new bank in over 40 years, and that's the Bank of Burlington. So that was a really exciting moment for us. And it does require a lot of staff time to actually do that. In addition to those 3 types of charters that we regulate, we also regulate companies that do bank-like services. So these are going to be non-bank entities that want to offer a product in Vermont. So think of mortgage lending, so Rocket Mortgage or other, Loan Depot, those types of companies that are not banks, but they do provide that capital so Vermonters can buy homes. In addition to that, there's something called loan servicing. So that's after you have a mortgage, you will send in your payment. Oftentimes that servicing right is sold to a third party who then collects the payments and makes sure it gets to the ultimate owner of the debt. The area that's really growing for us is in this area called money transmission. In the old days, you think of a company like Western Union, where if you needed to send money from Vermont to your son in college in California, you would use Western Union. Nowadays, everyone probably has Venmo or Cash App or Apple Pay. Those are all companies that would have a license in Vermont to offer that service to Vermonters. In addition to that sort of traditional money transmission business line, a number of years ago, we had the forethought to include the sale of cryptocurrency and virtual currencies in that licensing regime. So if you're not a bank or another federally regulated financial institution like that, you would need to get a license from DFR to offer that service. So as you can imagine, with Bitcoin going through the roof and everybody, my mother-in-law is a big Ether holder now. Don't get me started. Well, there's been a large growth in the number of companies that want to offer those services to Vermonters. We've all paid attention to the news. There's also been a lot of companies that have not done so well. FTX is probably the biggest poster child of what not to do. We have a few, sorry. So yeah, just in total, we have roughly on slide 12, 547 companies that hold approximately 1,840 licenses. We also licensed a few individuals. Those are called mortgage loan originators. Think back 15 years ago, there was the mortgage crisis. One of the smart responses that the states got together was to create something called the NMLS, the nationwide, at that time it was the mortgage licensing system. Now it's the nationwide multi-state licensing system. And that allows us to keep track of if there's a bad mortgage broker in Vermont, we can have an action. We can understand like, hey, this person just was fined by the state of California for their practices and so forth. So roughly 2,463 of those individuals hold a license here. That number is probably going to go down. Interest rates have gone up. Not a lot of people are taking out mortgages. So with the lower demand, there's probably no need to have that license. And also we do have a consumer services area that answers calls and tries to help people with any problems that they have with their financial institution or any entity that we regulate. And in the last 5 years, we've helped get back about $416,000 for consumers. Looking to slide 13, this is just kind of gives you an idea of kind of how it all works together. So we have a staff of 10 examiners who are conducting regular examinations of these institutions. For our banks and our credit unions, we also partner with our federal regulatory partners. So that's the FDIC, the National Credit Union Administration, who ensure the deposits of these institutions. So we make sure we collaborate and work together so we're not sort of doing the dual overlapping with our work. We're making sure we work together. Generally speaking, it's a good day when you don't hear any bad news about one of our banks. I always tell my team if no news is good news. So we don't want any problems with those institutions. Turning to slide 14, just a few of on the left side, a few of the other types of businesses we regulate. Retail installment financing. So that would be a company like Toyota Motor Credit. So you go to your dealer, you buy a car, they finance it for you. Then ultimately they're instantly selling that loan from that contract to that entity. So we regulate that. And there are other non-bank types of consumer lending and commercial lending entities that require a license here. And then a smaller subset of this is something called debt adjusting. And those are entities that really, you'll usually see the ads late night on TV, like credit counseling services. They help you negotiate with your creditors and work on budgeting and stuff. So that is an activity that requires licensure here. I put on sort of this other slide of emerging trends. I mentioned the cryptocurrency. Today, we'll be delivering to you a legislatively mandated report on virtual currency kiosks in Vermont. And during the last session, we updated our money transmission laws. And then also there was a moratorium placed on the issuing of any new cryptocurrency kiosks in the state. So a cryptocurrency kiosk is essentially, it's a Bitcoin ATM. So it's a machine in the store where customers can bring cash and use the cash to then purchase the virtual currency of their choice. There's a lot of fraud and issues that happen with these machines. And so we enacted some controls. We We limited the amount of cash that a consumer could go through these machines, and enacted some other controls. I don't want to steal the report's thunder, but it's pretty long, so I hope you pay attention to it. I mentioned that the financial industry consolidation. Also, sort of what keeps me up at night is just cybersecurity issues in general. Like, all of our institutions are computer-based. Their job is data security and making sure that this information is protected, is usable, is not lost, and is accurate. And so, because that's their job, it's also our job. Our examiners are trained to conduct these examinations on a regular basis. Sort of, I didn't put it on the slide, but as I walked over here, I thought of another comment just to provide you is sort of the way in which financial services are being delivered to consumers is also changing. So now there are business lines or ways of offering services. So there are companies that allow you to get paid in between your paychecks. It's called earned wage access. I think you'll hear more about that this session. There's something called buy now, pay later. So these are companies that you'll see it on the website, say split this purchase up over 4 payments or 10 payments. So there are lots of evolving ways in which those financial services are being offered to consumers, both in Vermont and nationally, that we're trying to keep our eyes on and understand how they fit within our regime. Probably sped through that. I apologize. I know we were pressed for time, but I'm definitely happy to take any questions that you have.
Just chat a little bit about payday lenders and.
Sure. So Vermont has not banned payday lending. What Vermont has done is set the interest rate that an entity can charge in Vermont to ultimately make it non-economical to offer those services in the state. So generally speaking, the interest rate cap in Vermont is 18%. There are some other exceptions to make it a little higher, but
also we don't we require them to become licensed?
Yeah, if they're not a bank offering the service, yes, they would have to be a licensed lender, so they would get the same scrutiny, and we would make sure that they are complying with not only the usury laws, but others as well.
Curious about the difference in the advantages to as a bank, be a federal bank or a state bank.
Sure. So there are, let's take TD Bank, for example. They have operations in many different states. So by being a national bank, they really only have that one regulator, where if they were a state bank in the state of New York, ultimately all of the states would really be able to oversee their activities. And there are some other nuances too with the National Bank Act, but that's generally the main crux of it, is sort of the one regulator approach.
What is your relationship with companies that do sort of loans and cash advances for businesses, like a cash advance for against accounts receivable, sort of those sort of fintech products?
Yeah,
Like the business version of payday lending, kind of.
Yeah, that's one area where, depending on the business model, it's not always clear whether or not our license would be required of that. Sometimes it looks like a loan, and for all practical purposes probably is, but it's ultimately you're buying an asset, the accounts receivable. So it can get really pretty nuanced in terms of making that distinction. And I know we have received complaints on some of those practices, but we don't have the ability to enforce traditional lending laws upon that transaction.
The staffing question.
Sure. We are fully staffed. We have had a lot of good luck hiring folks and keeping them, so we're very.
So,
What about technology? Do you have the technology state of the art. The data absorb.
I do. I mentioned that we partner with the FDIC and NCUA, and they have great technology that they give to us to do our job. We're essentially kind of working with them, and they provide these resources to help us do this job so they don't have to do this well.
Thank you.
You have a report coming.
Yeah, I mentioned the virtual currency kiosk report. Once I get back to my office, I will make sure it gets delivered.
Oh, okay, it's done.
It's done, correct?
We'll set up a time to bring you in and
Okay.
go through the report. Excellent. And just so everybody knows, I think the DFR housekeeping goes getting close to being finished, so when Maria has that done, I'll bring it in, so everyone has the opportunity to be co-sponsors if they like, and we'll have those discussions. All right, thank you. Thank you, guys. Thank you.
Good morning, Amanda Smith. I'm the Securities Deputy Commissioner. I've been with the Securities Division now for 14 years, and I joined the division after spending a decade in the securities industry. And working at DFR has by far been my favorite place to work. It's a fantastic state agency. So in the Securities Division, we administer and enforce the Vermont Uniform Securities Act. And really what that means as a high level is we have jurisdiction over the offer and sales of securities, stocks, bonds, mutual funds that take place within the state of Vermont. The core objective of our laws is investor protection. So what I'm going to do is go over real quickly just our different regulatory functions that we have that support investor protection. So I'm on slide number 15. First is registration. So a broker-dealer, let's say Morgan Stanley, if a firm is wanting to conduct securities business, they have to register with the Securities and Exchange Commission, then FINRA, and then seek registration with the state and where they're wishing to conduct securities business. So we manually review those registration requests. We have 2 folks that do that, and they do a fantastic job. The other type of firm is an investment advisory firm. So investment advisory firms that have 100 million in assets under management or less will seek registration in the state where they wish to conduct securities business. Now, both of these firms will have associated financial professionals that work for them and are actually the folks that are working with the client. So these individuals are required to pass certain exams and take continuing education. So that's first. Second, our examination team will examine on-site our regulated entities, such as the state investment advisory firms and the broker-dealer firms. And it's important that we're out there on-site because we want to make sure that they are complying with our laws. Specifically, we want to make sure they're upholding their fiduciary duty. We want to make sure they're operating in a sound financial manner and just be in their space to see what's going on. The third piece is we facilitate capital formation. So if a person or an entity is wishing to engage in a capital raise that involves securities such as stocks or bonds, they need to submit that offering to us and let us take a look at that. So our corporate finance director will review that offering to make sure there's nothing fraudulent in the terms of that offering. So I'm going to go over to page 16. So we have the authority to conduct investigations. And in our authority, we can compel testimony, we can issue subpoenas, we can require the production of records. So typically there's 3 different ways in where we're conducting an investigation. First is Vermont investors can submit complaints to the division. Let's say they have a complaint. I'm going to keep using Morgan Stanley. They're not getting good customer service, or they ask for a wire to come out of their account. It's not happening. We'll get involved in that matter, and it usually gets cleared up pretty quickly. So we're there to be in the middle to make sure that the investor is protected. The other piece is we will collaborate with other state securities regulators for multi-state matters. So the Securities Division is a member of the North American Securities Administrators Association. And as a member, we collaborate well and often with all securities regulators in the states, U.S. Virgin Islands, Puerto Rico, and Mexico. And what will happen is, let's say we're conducting an investigation, and let's say we find that Morgan Stanley, again, just as an example, There's an issue that doesn't just involve Vermont investors. It involves maybe some residents from New Jersey or Massachusetts. We'll reach out to them and we'll start a multi-state investigation together. It spreads the workload and it helps us get things done quickly. Last for the investigation is we will communicate with firms when there's a delay in disbursement when fraud is being conducted. So in our regulations in 8-4, there's a protection of vulnerable adults from financial exploitation. So if a firm such as Morgan Stanley suspects that a client of theirs is trying to wire money and it could be a fraudulent wire, for example, what we're seeing is folks are becoming victims of what's called the romance scam, right? They feel like they have made a connection online, someone's in love with them, and they need to wire them money to help them, right? So the firm will step in and go, whoa, we're going to delay disbursement for a minute. We want to talk with you more to figure out where this is going. So they can delay those funds up until, I think they've got like a 15-day mark. The report is filed with Adult Protective Services and the division, and we will just work together as we need to get to the bottom of that. And the majority of the time, it's resolved pretty quickly. You know, the investor's like, I didn't realize that was a scam. Thank you for stepping in. So when we're conducting our investigations, I'm moving on to page 17. If we find violations of our laws, we can either issue a cease and desist or move forward and with a stipulation and consent order. What we do is we will, again, move forward with administrative or civil actions for violation of our laws, and we always prioritize restitution to the investor. But typically what happens is we'll issue a stipulation and consent, the commissioner signs the order, and the firm or entity is required to pay a fine and or restitution, and we just monitor that to make sure everything is paid. So the last piece here is our education and outreach. DFR, I think, does a really good job using our department socials to, notify the public on the different scams and frauds that are taking place. And we share information from the SEC, the FTC, NASA, regarding just scams and frauds. And the other thing that we're doing, we really make an effort to get out into the Vermont community and just engage with everyone. So for example, the securities division right now, we're doing a fraud bingo game. So what we're doing is visiting senior centers, and it's a really fun interactive game to teach them about scams and frauds. And we'll spend an hour and a half with them. And it's just amazing to be with the senior community and hear what they're experiencing, how they protect themselves from scams and frauds, and just making a connection with them. We go out tomorrow to, I think it's the Heineberg. Thank you. Yeah. Yes. Yes. So we'll be there tomorrow at 10:30 till noon, and we're excited about that. So that's a high level overview of our regulatory functions and how that works. And on page 18, I'll give you a little bit of data here. So we have a little over 1,200 broker-dealer firms that are registered in Vermont. And there's over 136,000 affiliated sales agents with those firms. We have 57 state registered IA firms and 1,922 investment advisor reps that are registered in Vermont. The second, for our exams, we have conducted 24 state IA exams, 2022 to present. Moving on to our exams and our enforcement, 22 to present, our enforcement actions have led to the receipt of over 2 million in penalties and fines and over 397,000 to the Vermont Services and Victim Restitution Fund. And then lastly, for corporate finance, with all the reviews, registrations and exemption filings we received, that's generated 120 million. So in the securities division, as Sandy mentioned, we have a team of 9. We are small, but we are mighty. We bring immense amount of value. And I hope one day that we can get to a point where I at least have one more examiner. That would help tremendously. So that's it for me. Do y'all have any questions? I think I'm the last one here. So
You mentioned the situation of an individual being defrauded into
Yep.
money. So let's just say Morgan Stanley,
Right, exactly.
they say we don't want to do that, and the client says, yes, I still want you to do it.
Mhm.
Are they forced to send that to the Prince over in.
Oh, the prince over in China?
Yeah.
No, eventually, after talking with the client is adamant about that. Some point, the client just has to say, I'm doing this, right? And that's where, so what that does, it just creates a pause for the firm and and that client to be like, do I really want to do this? Yeah. Yep.
That interactive game with the senior community seems
Yeah.
a really great thing. Is that, how do you determine where to go, and what's the process for finding the next lucky group of senior citizens?
Well, so what we do is we ran a really long list of all the senior centers that are in the state. And we said, we're going to start from the top down to the bottom. And it's a very long list. I think we've got like 45 on the list. And what we're doing is, if anyone calls us back, we're just ready to go. We've called several senior centers. I don't think we've received a call back from everybody. But yeah, we have one scheduled for Thursday, and I think we've got 2 scheduled for February. So that's how we're doing that, just working through, just looking on the web and seeing where we can go.
I would love to remind some of the individuals that might be within my district or nearby. So would we reach out to someone in securities division or?
Yes, yeah. I don't, on the last slide, you have my email address. Just email me directly and I'll let you know where we're going to be ahead of time.
Awesome.
That's
Thank you.
wonderful. That's wonderful. Thank you. Thank you. Anything?
Yeah, I was curious, the fines and penalties.
Yes.
you cited.
Yep.
Is any of that restitution, or does that all go to general fund, or where does that
Um,
money end up?
So the way this is broken down is yes, it goes to restitution. So we prioritize restitution. I could get you some better data I just did this at a high level. I can get you some more concrete data if you like, but the goal is always restitution first. When you're working an investigation and you get to the enforcement piece, there's so many different factors there to determine, the penalty, fine, the restitution, et cetera. But answer to your question, yes, but I can get you more data if you would like. Yeah, absolutely. Yep.
I was just wondering on the romance scams and
Yes.
things like that. Do you guys have any dealing with pride issues? I'm an IT person and I've had to deal with people who have fallen victim to these things.
Yep.
And a lot of times I hear, well, no one's going to tell me what to do with my finances.
Of course.
How do you guys deal with that? Can you deal with that? Is there anything?
Well, we had one particular case last year where this individual thought they were investing in a legitimate crypto site. And they had it was a little over $100,000. And how that scam works, as you know, is once you send your money, they say, you're making so much more money, you need to send us more money if you want to take that money out of your account. So they give more and they give more and they give more. This individual called and we were like, that is a scam. And they just could not wrap their brain around the fact that they had become victim to that. And what I share with folks is these scam artists have gotten smarter and smarter, and they're just nasty and they push every button they can to play you. Please don't feel guilty, but please don't give any more money. We're going to have to work really hard to see if we can get this money back for you. So a lot of the times we'll have them file a complaint with the Federal Trade Commission. With the FBI, and have them look into that case to see if they can trace that money and try to get it back. But there's a lot of work to be done there, which is why we love going out and doing the frauds and scam game to talk to them about this, like what that looks like, and to be very, very careful. Yeah, it's hard because you're right. They don't want to believe it. It's a hard pill to swallow. Yeah.
Do you work with the Attorney General's office and get referrals from them as well?
Sometimes we do. Yeah.
Agency?
Yeah, we do. And then sometimes we get stuff that's intended for them. So we have developed a really good relationship with them, have contacts, and we communicate together. We share information very well and often. Yeah, good question. Good question.
Just so everybody knows, the CAP agency is a consumer assistance program that the Attorney General's office operates. It's operated out of UVM. When the Attorney General comes in shortly in the next few days. Today she's coming in.
20 minutes.
She is next, but we are gonna have a deeper dive into what the CAP agency does and how that works. Anything else for Amanda?
Yeah, thank you for the time. Nice to meet you all. Thank you.
Thank you.
Be in touch with you, okay? Yeah.
Um, we talked about the MLS system. Does that work with all the different divisions, the licensing, or is it just in the financial services?
It's just in the banking side of our licenses, but we do put all of our licenses in that system.
Yeah. Any final thoughts? I think we're good. Soon as, we'll schedule you, Aaron, back in when we have the report over that, and I think whenever that bill comes out, we'll have to have a discussion of where that goes. And as soon as we have the housekeeping bill, I'm gonna talk with Senator Chair Cummings to see what she would like to do, if she wants to start it there, or if she's busy. I know there's a lot going on concerning property taxes and education fund. So I'll talk with her and then we'll decide on where it starts. And, yeah, and then an update on the report that's due. That would be great as well. We'll also keep talking to you about the data privacy and where we're going with that. So, with that.